nodding off, not because of the quality of the discussions, but just out of jet lag. It's also nice to see the press down this morning. Those that still have ties on, can't take it off. Colleagues, this morning we are starting off with, as we were discussing today, you only get wisdom after you retire. And so those that have retired are going to share wisdom with us this morning. We have Ms. Radha Singh, will be most grateful if you could join me on stage now. And Dr. Rakayat Indonesia, you may as well. This morning we are starting with something that we seldom discuss, but the way the question is posed is most interesting. Is microcredit necessary for smallholder farming to succeed? I don't know, is it? I would say yes. I'm waiting to see those who say no. And then we can have a debate. Our first speaker this morning is Mr. Radha Singh, a colleague who has over 40 years of experience in public service, in rural and agricultural development, water resource management, in public finance, and institutional building. She has spent a good 40 years in the Indian Administrative Service and retired as the Secretary of Agriculture and Cooperation of the company recently. She's currently the advisor for the Agricultural Division of the Federation of Indian Chamber of Commerce and Industry. Many years of experience have now been put to use on many boards, including the board of the Yes Bank, Elton Food, and Jamal Fertilizer. Share with us your thoughts on this subject.
Good morning, everybody. Mr. Chairman and friends, my greetings to ICRISAT on its 40th Earth anniversary, and congratulations to the board, its management, and staff of ICRISAT for their exemplary performance in resolving so many scientific and research issues within its mandated areas during the course of these 40 years. Now, the current challenges take it much beyond its stated mandate. And this symposium exemplifies its small farmer-centric focus in all its aspects, in a genuine attempt to help farmers succeed in feeding the world and promoting economic growth. Friends, the topic of my presentation today is microcredit necessary for smallholder farming to succeed? And my hypothesis is that yes, indeed, credit is necessary. And within the larger canvas of credit, microcredit is indeed much more important when we are talking of small and marginal farms. So, why is credit necessary? It is necessary for supporting the development of small farms and agro enterprises, also for promoting growth food security, and poverty reduction. The dominance of small holdings in several countries of Asia, South Asia, Africa, and lot others make it important that we focus on small and marginal farmers, in fact, in our own interest, because they are contributing so much, in fact, more than 55% in the production of cereals, fruits, vegetables, milk, dairy, and this is an ever-increasing case. So, credit, in fact, is vital for farming operations, and whatever we have discussed yesterday via presentations or in informal and formal group discussions, I think the bottom line is that the small and marginal farmers really cannot take it anywhere unless we provide them with the necessary credit that they need for carrying out the progressive technologies that we are talking about, and also for increasing productivity. So what do they need? They need reliable and sustained access to short and medium-term credit for adapting and updating their production systems, for meeting seasonal requirements. And this, in fact, is very important because in the whole matrix of the big banks and the formal channels and the collaterals and the documentation, it is completely forgotten that that particular agricultural season is in fact lost. So if you make the credit available, but you do it after time has passed, it is of no meaning, no relevance. You might as well not give that credit. And also for making use of the emerging benefits and opportunities like linking up with markets and so on, about which we discussed yesterday. Now, why is it that microcredit now occupies such a central place in the whole credit structure? And that is because we find that there has been repeated systemic failure of RFIs, I mean the rural finance institutions, in appropriately reaching out to the vulnerable segments and providing them with financial support. I mean, that's the story across countries after countries. So what do we need to do? We need actually urgently to explore complementary avenues of reaching out to small and marginal farmers through microcredit institutions, which are more flexible, which are customer friendly, and which actually can adjust according to the needs and requirements of the small and marginal farmers. The increased footprint of the commercial banks, no doubt the banking sector is increasing and growing worldwide. But despite that, and the presence of large number of cooperative banks, and I can tell you that in Europe has, God knows, I mean, how many hundreds of thousands of branches, regional, rural banks, etc., they are still unable to service small and marginal landholders because of these various requirements that they have as a banking institution. And number two, that their penetration is still not deep enough to be actually touching the lives of so many thousands and millions of these small and marginal farmers. So, as a consequence, we find that liquidity constraints prohibit smallholders from intensifying production and graduating to what we call agro-based enterprises. Now, try to compress in one slide as to what really the small farmers need. Pretty much the same as the larger ones, except that there is need for greater sensitivity, for greater timeliness, and therefore they are in need of inputs, And that import, because of the resource constraint, necessarily in most cases needs and should be linked to the credit supply. Also, that bulk purchasing of inputs would result in lower costs, and this is in the context of group formations about which there have been a large amount of discussion yesterday. They require responsive infrastructure and going, anti-clockwise. They require infrastructure. They need what we call extension linkages. Then, of course, they would require credit to begin with, insurance and risk mitigation services, and of course, market linkages. All these requirements would be greatly facilitated if they are also capable of forming what we have discussed, producers marketing associations that enhances their bargaining capacity and they are able to negotiate much better with the market. Now, a little bit of the Indian flavor, and this is regards India's rural finance institutions network. It has the world's largest and most diverse infrastructure focused primarily on agricultural credit. I'm not talking about the credit which these banks, etc., are doing in urban areas. This is all directed towards agricultural credit. It has more than 0.18 million outlets which are catering to the needs of rural credit delivery. And this is being done through a network of commercial, cooperatives, and regional rural banks. In recent times, and as recent as last year, we have looked at the figures, and we find that the credit flows to Indian agriculture has increased more than 15 times in the last 10 years. It's a very important political agenda also, because governments feel compelled, whichever government is in power, that you increase the total outlay of the credits that are being discussed to the farming community, with, of course, special emphasis on small and marginal farmers. So as of the date, this is March 2012, we have dispensed credit worth 5.09 lakh crores. Now, somebody does the mathematics, divide this by what gets into dollars 55, and you come to a phenomenal amount of farm credit being dispersed. But despite such a well-spread network of banks and quantum jump in credit flows, credit coverage by these institutions is only around 46 to 50%. So what that means is still 50% of the farmers are outside the credit. The percentage share of female operational holders has increased, and this is in proportion to the number of small and marginal holders also, which are increasing. As we speak, the number of holdings are dividing and subdividing, and the 2001 census said that we had about 10.6 crore farmers, which I think as of date would have become close to about 30 crores or even more. So that's a huge number to handle. While we talk in terms of numbers, because that facilitates discussion, we really have to even go beyond these numbers to look at whether or not regional imbalances are being addressed, that there is a proportionate share in the credit being made available to small and marginal farmers, and also the fact whether this credit which is being dispersed is in fact synchronized with the agriculture season. I mean, the flow of credit, whether or not it is in harmony with the agriculture season. Now, just a quick slide to show you, because I spoke of regional disparities, and you will observe for yourselves that in the northern region, it gets the highest amount of credit, which is 1,50,000 15,575 crores. And then, of course, the northeastern sector, because of the topography and also the difficulties, remoteness, etc., is getting the least amount when 7 states are there. The eastern sector, typically Bihar, Orissa, West Bengal, they are next in line from the bottom. Central India, well, somewhere in the middle. Western India also. What is surprising is Southern India too does not get too much if you look at the overall totality, because I guess the microcredit institutions were doing very well in several states till very recently when all that trouble broke out. This is now the slide based on percentage-wise division between small and marginal farmers. Again, a bird's eye view of how it plays out in the various regions that we have here in the country, the northern, the northeastern, eastern, central, western, southern, and of course, the all-Indian total. Now, how typically is a microfinance sector structured in India? Well, we have what we call the self-help group programs, and this is doing pretty well. It is the mainstay of Indian microfinance with 7.4 million self-help groups covering over 100 million households. Now, I don't swear by these figures because you know you need to collect them from so many ends. But what is published in the Political Economic Weekly or even sometimes given by NABARD, these figures are really based on that. And as you know, the self-help groups, they act as willing-to-based financial intermediaries with savings first approach. And that is important. They are required to deposit some money before they can be lent something. So the rates of recovery typically, therefore, are much higher. Then we have other kinds of group formations, which are the joint liability groups. And here, this is saving is not compulsory, but these act purely as credit groups. Then the MFIL, which is published its report, reports that we have in this country 45 member organizations of microfinance institutions network with 9,843 branches. That study tells us that as a consequence of the self-help groups having been formed and being in operation, 86% increase in cultivated areas and 75% increase in the income of the farmer. So obviously they are doing well and they have a place in the lives, very important place in the lives of the small and marginal farmers. Now, the big story is, I tried to put it in this one slide, that why microfinance is necessary. Well, it is necessary because in the context of small farm holders, formal credit delivery mechanisms are not only inadequate, but ill-designed. I said earlier that the penetration is not deep enough, and number two, that there is also a design failure, that they are just not nimble enough, they are not flexible enough, the documentation, paperwork is just too huge and humongous for the farmers actually to cope. So that is why the microfinance arrangement looks to be more farmer friendly. These large banks, they have low efficiency, relatively low coverage, because as you can see for yourself, covered only about 46 to 50% of the farm population in the country, and several conditionalities. On the other hand, microcredit institutions, groups have the necessary flexibility to overcome these constraints. They can customize loans according to the needs of the farming community, and for purposes of sustainability, and this is very important to underline because no financial institution can just go about giving loans as gratis and get into deep NPAs and thereby, the next day they might shop and they are not to be seen anymore. So what these MFIs typically do is that they rely on income diversification of households. And in fact, they encourage these poor households to get into a whole lot of diverse activities, very much akin to what we have been discussing about integrated farming approaches. You have livestock typically, you have on-farm arrangements, you have off-farm livelihood supports, and this institutions actually encourage these microfinance institutions. And that is, of course, with the hidden motive that their loans should not be allowed to sink. But then it also helps to uplift the farmers and brings a new dynamics into the whole system of small and marginal farm. Now, I try to also break out that on farm, for on farm productivity, what is it that small farmers feel constrained about? They are typically very constrained regarding the economies of scale and how to build volume. This can be brought about if the required credit flow is made available to them. Number one, for hiring farm implements, in case they feel that they need to mechanize, in case they feel that labor is not immediately available or labor is inefficient, that facilitates this process. They can get into adoption of high-yielding variety of seeds, yield enhancing technologies. They listen to a whole lot of information channels which are available now to the mobiles, etc. They know it all. But if they don't have the financial resources actually to put these technologies into operation, I mean, all our efforts towards information technology, etc., means nothing to them. They just know and they know, and I think internally must be extremely frustrated that I know it all, but I don't have the wherewithal to actually put it into practice on my small holding. So that's how important it is to empower them actually with credit. And I mean, this is basically just a repeat of what I have been saying. Even a higher cropping intensity and higher improved labor efficiency will require credit. Then scale neutrality. This I was talking at the farming. How do they increase production, productivity, help to get more progressive and what? And now we come to the next scale. Again, with scale, these economies standing in the way. So how do they build scale? They can build scale by actually connecting with other groups, for which again, credit is the very basic. It is the very fundamental of how he gets to connect with other groups. While social capital is very important, needs to be there, is a necessary conditionality, but to make that operational, you just need to have cash in hand, credit in hand. And he also, I think she also requires what we call responsive infrastructure and institutions for linking these small holders. Then credit is also required for firms linking with small holders, example of dairy, not typically just crops, but of dairy, of horticulture, of poultry, of vegetable. These are all the value additives in his life, in his income, in his cash flow. So, and that then connects with him or her to the market and enables them to get fair price. Supermarket linking with small holders, wire vendors, guaranteeing market access to the poor. So it's a link, it's a chain, and the chain only becomes operational provided there is liquidity in the system. Also, that information technology makes it possible for them at very low cost to connect to the market. So therefore, scale neutralization at both the farm level as well as the marketing, processing, and retailing fronts is possible through innovative interventions and support of what we call the microfinance institution, the self-help groups, the joint liability groups, the equity-based savings scheme that you have in Kenya, known worldwide, and other flexible arrangements that puts money in the hands of the farmer. We have here now just trying to list some global successes, world-acclaimed successes. The Grameen Bank, need not dwell on that one. Worldwide, well-known Mohammed Yunus being the big guru and the author of this wonderful initiative, which has transformed the lives of millions of people and, in fact, inspired millions others across countries to adopt a similar model. Then we have the basic krishi samriddhi program in India. We have the Vasundhara dairy in Valsad in Gujarat, where lots of these women farmers have gotten together under self-help groups. Details of all this are available. I think because of shortage of time, I cannot dwell on this, but those of you who are interested in our literature is available. Equity Building Society, EBS in Kenya, they have done fantastic work in connecting thousands and thousands of farmers across a large number of villages in and around Nairobi and in the central provinces of Kenya, across the well-known Aga Khan development network is well-known and well advertised. So, in conclusion, what do we say? Given its various customer-friendly features, microcredit is necessary and beneficial to small farmers. This, after considerable analysis at several ends within and outside the establishment across several countries, this is the conclusion that they have come to. While microcredit is necessary for small farmer success, it is certainly not sufficient. So let's not say, okay, so we've given them the credit, now let them do their homework. That's not adequate. Absolutely not. I mean, that may be an entry point at best, and a little more. But it needs a lot of plus, 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 plus. And that is really being supportive of the small and marginal farmers who, at least as far as India is concerned, I mean, 83% of the farm hold is basically in the hands of small and marginal farmers. And increasing as we talk, because land is in fact such a sensitive issue, they just hang on to it, there is no logic, they get nothing out of it, but they will not let go. And they divide and they subdivide, and as you know, the inheritance system here is such that the land goes out from the father to son and grandson, and that's the way it goes. And it's not likely to change because this is a cultural thing, and we will create turmoil in the rural countryside if we try to reverse this. So we just have to bear with this in a sense. I'm using the word bear in inverted commas. It's not indulgence, but it is just recognition of reality and try and work around that system and see how we help them to become more efficient. Then, given the high probability of production and or market failure risk faced by smallholders, there always is an epidemic default risk. Now, this we have to be very cognizant about because we don't want a whole lot of NPA portfolios hanging around us, and then at the end of the day, it's either government or it is some private investor who is told that, okay, now, you forget it, you get the loan now. How many times are they going to write off these loans? So some reality has to be built into the situation, and we have to be very careful to recognize this, that how can we prevent these epidemic default risks to come in the way of sustainable microcredit interventions. So what we need is a comprehensive methodology that includes